Good day, traders. The 4-step method to high performance trading is a free course download for increasing your confidence in your ability to execute your trading edge in live time. The link for the download is in the description box below. And the free audio program, the 7-step daily routine for high performance traders, is also a free download to develop your discipline, your confidence, and a winning mindset to master the markets. Again, the download for these links is in the description box. They're both free downloads. Let's get started.
Good day, traders. Stacey Burke from Stacey Burke Trading. Today we're going to be talking about 3 best dressed list playbook trading setups. 3 trading setups that recur and show up again and again and again. And as my mentor, one of my mentors, Peter Brandt, used to publish, still publishes the Factor newsletter and his Factor best dressed list. And he has certain criteria that need to fulfill to be on that best dressed list. And Peter has often stated that the bulk of his trading profits will come from 3 or 4 large trades throughout the year, which are on weekly, monthly charts and have been classical charting patterns. And I use the same criteria not only in putting my playbook together, but also filtering out the garbage. And as I mentioned in yesterday's video, we'll just review the Everything You Need playlist because it's about focusing on 90-10 opportunities, knowing when to size in and when it's going to be easy to make money, when markets aren't going to come back because they're coiled for explosive moves. Peter has some clearly defined rules and similar, but for myself, day trading in the New York session and the Asian session, occasionally front side, back side. Those trades are designed either for a session trade, a range expansion, or a range high to low, low to high for asymmetrical risk reward. And as Peter has mentioned here, his 3 main criteria clearly defined, no doubt about it, classical chart pattern, preferably at least 10 to 12 weeks. Now I shorten that and say 10 to 12 hours. In some cases it can be 3 days or the course of a week, and we'll be looking at a very specific example of that today from the playbook. A decisive breakout that does not put a reasonable breakout entry into serious harm. Now Peter's a classical charting breakout trader. And as I reinforce over and over again, the reason why I focus on the high and low of the day, the high and low of the week, and I mentioned that most breakouts fail because when the markets are set up in a classical charting pattern for a breakout, they will explode. And when we see a best dressed list candidate playbook trading setup, that is the thesis behind them, whether it is a reversal trade or a trend trade. And then number 3, an intermediate trend to the implied target. Now I talk about measured moves. One thing that was very powerful for me that I learned from Peter was the range expansion targets. Not only learning to take a profit target, and Bill McLaren, pre-programming that to make sure that regardless if it continued for a second range expansion, depending on the type of setup, the session, etc., making sure that I got paid and where a trade could fail. So as he states here, I look for patterns that typically reach their targets in a matter of days or weeks. And that same criteria filters down on a fractal level that they need to fulfill them based on timings. And I talk about the hourly rotations. And when we're on a longer time frame trade setup where other time frame traders could be driving it, it could be a 4-hour, 8-hour, 12-hour move if it's continuing and reversing off the high or low of the week. Just going back to the playbook, reinforce reviewing some of the simple criteria that opening range initial balance and it's so important to understand the weekly templates, the power of a 3-day setup, opening range initial balance. Today we are going to be addressing a parabolic day 0 trend trade setup. We're also going to be looking at a parabolic short squeeze reversal, page 90 in the playbook. And we'll also be looking at a first red day best dressed candidate on page 58 from the playbook. I just want to repeat before we get started to people who are new or who have just jumped in or have only caught one or two videos that I've tried to compile the most recent, very specific videos in a folder that is titled Everything You Need Is in This Playlist. Timings, levels, behavior of price, the templates, the setups, the day counts, every single thing you can think of that will help you grow your trading business and scale it up in size. This playlist, again, is titled Everything You Need Is in This Playlist. Now, today we're going to be talking about 3 different setups from this week. And I want to just state that when you step back and understand the power of these parabolic setups, you realize that trying to catch moves, scalp highs, buy lows, catch little swings, all these things are completely different than actually executing trading setups from the playbook that are designed to scale up in size. They repeat over and over again on any instrument. And so these three we're going to talk about today are from this week. We're going to talk about a 3-day parabolic trend trade setup on day 3. Euro Oz, page 84 in the playbook, at day 0, peak formation high, peak formation low, opening range, initial balance for a parabolic move on day 3. We're also going to then talk about the parabolic short squeeze reversal trade setup. The key thing with understanding these setups is we're going to show how if you use hindsight, it will help you identify a parabolic, scalable, rinse and repeat best trade candidate. And then number 3, a first red day shorting reversal trade setup, which could be the beginning of a backside, even a bigger move, perhaps we'll see heading into Free Cash Friday, but on the Dow Jones 30. And how I looked at the 3 indexes today to filter out the other 2 and identify what I considered to be an ideal first red day shorting opportunity on the DJ30. But first, let's talk about the Euro Oz. I'm going to make this so simple and clean because we're going to talk just about the most basic template, a Monday, Tuesday, Wednesday, day 0, 3-day setup. We're not going to talk about day counts or anything else because this is the simplest template you can master. Simple and powerful. And that is when Monday starts a new week, Monday's day 1. And I repeat this over and over again. Monday, Tuesday, Wednesday is at day 1, day 2, day 3. Wednesday is the midpoint range of the week. And you can go back through the other videos in the playlist I just showed. Wednesday, Thursday, Friday is the reset for a day 1, day 2, day 3 heading into Free Cash Friday for the closing range of the week. Now, when we look at the Euro Oz, we have our opening range for the week. And when we had major red news on Tuesday, day 2. Now, this is a 3-day setup. We're looking for day 3 on Wednesday. And the simple process is this. We have a peak formation low made on the beginning of our week. That's our Monday. That's day 1. That's the low of our new week. We have a peak formation high made on our Tuesday in a market that has broken out. That can be considered right down to closing price. Closes below the high. And on Monday, that is our low. Tuesday broke out on Monday's high, peak formation low, peak formation high, consolidation. Now, when we come to day 3, when I look at a day 3, a Wednesday, I am only ever looking for one of 2 types of trades, a parabolic trend continuation trade, a parabolic reversal trade. As I have repeated over and over again, on the front side of a market, we are looking potentially at several days on any instrument where we can see a trend continuation, day 1, day 2, day 3, blowing off in the direction of the trend. When we come to our Wednesday, so I want to just state again, I use 1-hour templates to identify the larger picture. I am not concerned about anything inside or anything else. I use high of day, low of day, closing price as my areas to identify the entry in the timing window. Again, go back and watch the other videos. They are very, very specific about timings, levels, the setups. Everything that you need is in that playlist to identify all the questions that you may have to ask. Now, the reason why it's important for me to just mention again the hourly templates is because I'm looking for trades that are driven by larger time frames, and I'm going to position myself in that trade setup in the timing window, which I repeat, New York Open, unless there's major red news at 9:30, 9:45, 10 a.m., my go-to time for an entry is 9:30 New York Open. That is separate from taking a news catalyst trade setup or anything else. 9:30 9:30. So again, the timings, everything are discussed in the other videos, several videos in fact. But this is a day 3, our Wednesday day 3, 3-day parabolic trend trade setup. A peak formation low on Monday, our opening range. Day 2, Tuesday, breaks out of our opening range, peak formation high. We have our high of the week. Our blue dotted line is the high of the week. We're on day 3 with a day 0 setup. Heading into our New York open window, the thesis is this: closing price to low of day. That is my target potentially for a range expansion opportunity. 2 full expansions, 1 minimum, and how does price behave when we get there? Do I hold on to this? Do I take some off? This has the potential on a day 3 for a 200% range expansion of this smaller geometrical rectangle. Now we have a larger pattern from our opening range breakout, but this is a dump and pump template. Again, go back and study the other videos. We have higher highs on the inside heading into our New York Open. There are 2 types of templates on the day: a pump and dump template or a dump and pump template on a well-engineered chart. 9:30 New York. Now, I also want to just reinforce the simple concept of taking a trade and just trying to catch pips, or understanding when I have a trade setup that is a parabolic trade setup driven by other time frame traders, where I am in the position to scale up significantly to profit from this opportunity when it presents. Now, when I see an opportunity like this, I have different risk-reward opportunities. I've mentioned this in other videos. There are 3-star, 5-star, depending on the setups, session trades, or parabolic measured moves. And as Peter talks about, there are 3 or 4 trades in a week. You only need a couple of parabolic trade setups that are 5-star opportunities to significantly grow your trading account. So what I'm getting at is I don't take every single trade and risk 1%. There are trades where I am going to size in heavily when I have other time frame traders driving these moves. These are the trade setups that will make traders a significant amount of money. Risk is well defined. This trade should be moving aggressively upon the entry. It's already coiled sideways. We're on day 3. This isn't a trade that should auction up and down. That's what day 2s do. If you're in the wrong day and you're trading a chop day, that is not a setup. That's trying to catch a move. This is an engineered setup for day 3 for a parabolic range expansion to significantly profit from. A 3-day, day 0 parabolic trend trade opportunity on the Euro Oz. This trade played out, gave traders well over 100 pips. Parabolic, vertical. Traders have asked, what do you mean by parabolic? This is a mathematical curvature that goes straight up out of a coiled market on day 3 for a range expansion, asymmetrical risk reward, probably in the neighborhood of 7 to 8 times the risk return on this trade setup. These are the trades that will significantly grow your trading account. That's why this trade is on the best dress list. Now, the next setup that we're going to look at is the parabolic short squeeze reversal from page 90 in the playbook on gold today. Now, what's really great about this particular setup that played out today for several traders is that I talked about this specifically in yesterday's videos. 3 days of breakout traders in the markets, and traders often will be looking to try and counter trend a market that's still on the front side. I talked about a day 3 trend continuation on gold yesterday, but that triggered day 3 breakouts into the market. And one of the things you will often see on gold in particular is a 4th day where they trap volume down low, a 4th day where traders are trying to counter trend that, but the market actually hasn't given that. And it's a 3-session, day 3, 3 days of breakouts in the market, explosive reversal. And even on the reversal itself, traders are trying to counter trend. And I keep repeating this on a short squeeze, other time frame traders, DNC. Do not counter trend that. That market, we had a Fed today at 2 o'clock. Later, that market might fade and drop or come back and stop hunt. But on the front side of that short squeeze, DNC, because it can go on a range expansion, as we'll look at today, a very, very powerful setup that shows up repeatedly, shows up on the Canadian dollar often as well. But gold, we will see this show up repeatedly. So we talked about gold, that there was other trades. We had Friday trades, we had Tuesday trades, we had Wednesday trades, different setups from the playbook. But we'll go back to the process. Remember, I'm talking about how to identify them before they happen. We're looking for signal days. We're looking for what criteria in hindsight will actually give us a best trade candidate. And one of the things we talked about, I'm not going to review the day count and everything. We'll just talk about breakout traders. Monday, our opening range. So we had a failed breakout, which was a day 3 blow off measured move. Again, on Friday after payrolls, we had one full range expansion on a day 3 that failed. It was a failed breakout. Repeatedly, we're not going to discuss day count. We're just going to stick to the template. But I mentioned to traders, once this breakout failed, we had now had a new day count, which gave traders a day 3 opportunity. In Asia, we had a reversal trade in the US, but we also triggered day 2 breakouts on Tuesday. Okay, so shorts. Breakout traders are in the market. Traders that are shorting this at the breaks of the low of the day. Other time frame traders, whatever that may be, or later in the day of the US session, they're shorting it based on that criteria. We have day 3 breakouts in the market on Free Cash Wednesday, which we had the parabolic continuation in the New York session for a range expansion. Now, I mentioned this, our original day 3, we had a full range expansion and then traded through that on Free Cash Wednesday. And lo and behold, 4 days of breakout traders in the market when we come to our US session, and also 2 full range expansions of our original day 3 that broke out. So we have 3 days of breakout traders in the market. That is our signal day from the playbook. Page 51 in the playbook, trigger days. Those are signal days. And as I mentioned, okay, like yesterday, traders were trying to short, buy gold because it broke out of the low of the day on day 3 shorts. And as I mentioned, that was an existing trade in a range expansion already from Tuesday. There's no trade set up there. It's just traders trying to scalp off the bottom. That is not what I'm talking about here. I'm talking about very specific, repeatable habits and behaviors of the markets that pay you big time when you understand to sit on your hands and wait for these opportunities, and then let the market set up with a well-engineered template on the day of the trade itself. So we come into our US session and we have triggered day 4 breakout traders in the market, and we are 2 full range expansions from Tuesday's breakout of the opening range. And we are also outside of the low of the day on the day itself. Now, this opportunity had several entry opportunities for traders. We had major red news at 8:30, unemployment claims, and we also had Fed later in the day at 2 p.m. First hour gave a news catalyst opportunity to enter in on a short squeeze ascending triangle in a smaller time frame. But more importantly, if traders were not, again, I tell traders, don't worry about trading the news. Don't even worry about that unless you have the experience and the understanding. We go into that in the playbook, but more in depth in the videos I've talked about the different types of news catalyst opportunities. The important thing to understand is that we have day 4 shorts in the market. We also have on our 5-minute chart, which is the same on a longer time frame, a pattern within a pattern, a smaller rectangle at the low of our month, our week, and our day on day 4 shorts in the market. After the news, this market reversed in the first hour. So repeating, go back, study the other videos. First hour puts in a high and a low. That in this case, the market has put in a low of the day into our peak formation low and our low of the day from London. So we have a low, an existing low in place. They have traded down into it, pumped up higher high on the inside, which is a setup for the dump and pump before trading back into it on the news and then breaking higher. This is before the second hour begins. The new hour starts, and on this template, so traders are trading on the 1 minute, and they miss this because they want to wait for 9:30. And I've talked about this. Gold can move in the first hour. Currencies can move in the first hour when there's a setup. They can move in the gap sometimes. Indexes open at 9:30. There's a difference. There is the odd situation where we'll get a first hour trade on an index breaking down from the high of the week for an all-day fade on a Friday, free cash Friday, heading into the news, and it might continue and force traders to keep selling lower or buying higher. This is a second hour opportunity. We had first hour major red news opportunity. We had a second hour beginning of the new hour. So when we have other time frame traders trading this market, as I mentioned, open up your 1 hour charts and look at the 1 hour candles. When 1 hour closes or gets to the end of an hour and there's an entry, the next hour will continue that move or reverse if we're at the high or low, if it's a reversal setup. So we have a new hour starting and we already have a higher high, a dump and pump into the new hour. Then we have a continuation pin hammer on our New York Open. Now, you can only take these trades when you understand the larger template. There are two things to understand. The first position has already targeted a minimum range expansion of 100% expansion of the range. The larger template on day 4 shorts in the market, on a parabolic reversal short squeeze opportunity, is a full range expansion of the high and low of the day. This is a box. This is a smaller version of a day 0 setup, a 3-session day 0 setup from the playbook. Peak formation high, peak formation low, consolidation. You've heard me mention the phrase, are they working the high or are they working the low? 1 push, 2 pushes, 3 pushes into the low on major red news on 4-day shorts in the market for a parabolic short squeeze reversal that is not coming back anytime soon, which is why I constantly say to traders, when it gets outside of the high of the day, DNC. The first place that this could fail after the high of the day is the breakout level low of the day from Free Cash Wednesday. The next place they're going to go is, we'll just go to our longer time frame, 15-minute chart, is back into shorts from day 3, the parabolic blow off into the low of the week. So we have a parabolic short squeeze reversal that has completed 1 full expansion of the high low of the range, 200% expansion of our smaller pattern within a pattern, giving traders easy, scalable, free cash Thursday. This was a massive opportunity. And again, this is a repeatable trading setup, which is why it's on the best dress list for this week. This was a massive windfall for traders today. And coming back to understanding about taking profits. Once this market starts to coil up top, my profit targets are usually preset. I will take some off the way, but I will hold on for that full range expansion. Once gold comes out of a short squeeze parabolic reversal, very rarely is it going to let people out before it travels at least that full expansion of the range, which will, in most cases, if anybody's counter-trended this market with any size at all, blow their trading account out. Parabolic short squeeze reversal on the best dress list on gold today. Next, we'll be talking about the first red day setup, shorting reversal trade setup, which occurred on the DJ30 today. It was an excellent opportunity. We're going to talk about why I picked the DJ30 as opposed to the S&P or the NASDAQ. And again, this is on page 58 in the playbook. And first red day is on page 58 in the playbook. It's a selling opportunity, high of session, high of day, if indeed that trade sets up. So I want to take a short look at all 3 indexes and my rationale for picking the DJ30. Now let's just go back to our Monday to Friday, Monday, Tuesday, Wednesday template. We had an inside day on Monday on the S&P. Tuesday broke out, so we had day 1 longs in a new template. So we had an inside breakout of an inside day. Wednesday broke higher again, still bullish, still front side. No first red day heading into our Wednesday. But that market closed below its open on Wednesday, giving us our first red day. The close was below the open and a lower close. Now that market was still pushing up higher today as we headed into our New York Open. This black candle, we'll push it right over here. Our bear candle right at the high. So we're making higher highs even though we had a first red day signal. So coming back to my rationale, looking at the 3 different indexes, we'll look at the NASDAQ next. this pair was still making higher highs. So talking about front side, backside, even though we had a first red day, I'm still in a market that is potentially moving higher. Now, obviously, we can see that market broke down, but we'll compare that to the NASDAQ. The NASDAQ actually broke higher on Monday. We had a higher high on Monday. We broke higher again on Tuesday and actually broke out. So we have day 2 longs in the market on Tuesday. We're just talking strictly Monday, Wednesday, Friday template. No first red day, still making higher closes and higher highs. And on Wednesday, we just slightly pipped the high of the week before closing below the open, giving us a first red day trigger day. And the same process applied on the NASDAQ. We have a fairly strong breakout as compared to the S&P and making higher highs. So we can talk about the potential of a market coming back from an opening range breakout, and we'll go back to the S&P in a sec. But we have a market that's still outside of the breakout, even though it's given us a first red day, we're making higher highs. If we go back to the S&P and we just look at our opening range, our inside bar, we have an opening range breakout, but not as strong as what the NASDAQ was. So we had space on the NASDAQ, which some traders may have considered maybe more of an ideal candidate after our first red day. But when we opened, we were up high and we had not broken down yet. Potential was there, but again, we'll look at the DJ30 and my rationale for taking that index over the other two. So when we look at the DJ30, we had an inside day on Monday. We're not going to talk about the closing range. We're just talking about Monday, Wednesday, Friday. No breakout of the opening range. Tuesday, we made higher highs, but there's no breakout. We have breakout traders triggered in the market. Day 1, day 2, we have a lower low. We had an inside day. They've triggered the low of the inside day. That's a break in structure on the inside. So an indication of a potential dump and pump. Lower low on the inside. The other two indexes did not break structure on the inside. Remember, if I'm going to short something, I want to potentially sell weakness as opposed to selling strength. If I'm going to buy something, I want to buy strength. We're on the NASDAQ. We have no breaks in structure. We have no breaks in structure on the S&P either in terms of breaking a daily level. This is why it's important to focus on the levels. Like a lot of traders are marking off these little swing highs and swing lows inside and calling them breaks in structure and everything else, but that is not the other time frame traders. We got our first red day on the close of Wednesday, in which also I considered this 1, 2, 3 hourly chart movement down as a death candle, a large death candle on a longer time frame. Now on my chart today, traders would have noticed a couple of things. I projected the closing price across and the high of the Tuesday's high. Opening range initial balance. In a high percentage of cases, one of those extremes will tend to hold. We triggered breakouts on Wednesday at the high of the week, at the high of Tuesday's initial balance, opening range initial balance, before closing back inside of Monday's range. Now, go back and look at the NASDAQ. We broke out and closed outside of the range and stayed outside of the range. Strength. We broke out on the S&P and closed outside of the opening range. Now, obviously, the other two indexes also collapsed later in the session. But coming into the New York Open, my thesis was this: first red day. This market has the potential to break down to the low of the day. Now, when we come to our smaller time frame, you'll see that the setup was there. How did price behave at the level in the timing window when it gets there? First red day setup. Now, was I expecting a range expansion today? Not necessarily. Is the potential there? Nah, it could have been. We had Fed later at 2 o'clock, but thesis is more importantly was that I wanted to see the market break down at least to the low of the day. On a day like this, as you've heard me say, closing price can be 50% of the range. And that was my underlying thesis behind this trade, is that closing price today is 50% of the range, and that my initial target would be the low of the day. Now, this is a 5-minute chart, but we're looking at the larger template. We have our first red day closing price. That's my highest closing price for the week. Why do I put that there? Because I trade from the levels and the high of Tuesday's high of the week initial balance, opening range initial balance, and the fact that we had a first red day. This highest closing price or the high of the initial balance could be a significant level of resistance if the first red day trade is going to play out. Pump up from the US low, 3 levels, 50, 50, and 50. That's 150 pips from the low of the US session up into that peak formation at the New York Open. Now I'm using a 5-minute chart, but I also will finesse myself a better entry on the 1 minute when this 5-minute chart is already setting up. Remember, I have the hourly template. My larger template is already in place. This market pumps up in the beginning of our US window and engulfs right at the last 5-minute candle of the New York Open. So as this candle closes and closes below the middle structure of our M at the high of the day on our first red day trade setup into closing price and high of the week, this market is set up for a parabolic collapse. Now this is a 5-minute chart again, so there's plenty of time to get into this market, even understanding the number levels. This is a 25 pip box in a 5-minute chart. As price is confirming, I have a max stop loss, worst case scenario, on the large candle. Now my point is this, is that when we'll get more into scaling in later, but I have an opportunity now based on the levels, the number levels of a market that not only is potentially going to do a range expansion of this upper pattern within a pattern. This is a rectangle. 2 full expansions of the range takes us down to the low of the day. Low of the day on a first red day trade, which we measured was 150 pips from top to bottom. Those 3 levels of 50, 50, and 50 for a parabolic shorting opportunity. Entering in on the smaller time frame gives us an opportunity to capitalize on the maximum amount of this range, which in excess of 200 from top to bottom, but a fantastic shorting first red day trade setup on the backside, potentially now entering into the backside of the week. So remember, Monday, Tuesday, Wednesday, let's go back, just look at our 15-minute chart. Opening range, 1 push, 2 push, first red day, third push to the high, 1, 2, 3, and 1, 2, 3 on our first red day trade for a collapse through the low of the day. Now this last move from closing price down, we'll go to our 1-minute chart just to show traders, when you understand the larger template, scaling into these trades isn't that bad, but also for traders understanding time rotation, 1 hour down. New hour opens, engulfment, pin hammer. We'll just highlight this for traders to see. Engulfment, pin hammer for the continuation down through the low of the day, which still gave traders almost 100 pips down to the low of the day. A 1-bar stop. This trade should not come back. Any backlash against this, I would have cut the trade. But if traders were already in from up top, they may want to take some out and trail all the way down. Or if they're locking in profits and re-entering, again, we have a measured move target to the low of the day already in place, a level to go to break even at, and once we start to have two-sided auctioning and the end of an hour approaching, locking in the money on a first red day short. So going back to our bigger picture, first red day, opening range inside day, first break of a daily high, the opening range break, broke out again and failed, closed on the inside as a first red day, as opposed to the other 2 indexes which broke out. The NASDAQ was the strongest of the 3. So in my mind, the worst candidate to try and short, even though it broke down. But I was looking for the easy trade right off the bat. First red day trade, New York Open, engulfment. We had our micro M structure on the 5-minute chart. This is the 15-minute before breaking down from high of day, high of week, first red day trade to the low of the day. If we just take our little bit look at the U.S. session low, remembering the low of day, high of day levels is where the pump began, heading into the New York Open for the dump. The entire day is Fugazi. They dragged it back up into shorts from Wednesday before dumping it back down from the highest closing price of the week and the high of the week level, pulling back at closing price from our first red day to continue that move down to the low of the week. Best dress list, first red day trade, DJ 30 on Free Cash Thursday. So just reinforcing, everything's in here, but I really want to paint the picture of understanding parabolic trades. We're not trying to get a direction right and catch some pips. That's bread and butter stuff. We're talking about scalable, reproducible trade setups that can grow your trading account 6, 7, maybe 8 figures. If you can control yourself, if you can just master the patience to step back and look at the bigger picture. I'm not looking at little zigzags on a 1-minute chart. I'm looking at the templates. These are powerful, powerful, powerful trading setups. And they are scalable in size. Rinse and repeat. The best dress list for this week so far, we're not even at Free Cash Friday, but those are 3 textbook playbook best trade setups that are rinse and repeat. They show up on any instrument, not just one. I don't just trade the NASDAQ because it's my favorite, or whatever, the Euro Oz, whatever that pair is, but I don't care what it shows up on. I want to find the setup. And when I can find the best setup, I'm going to trade it. And if I can size into it on the day, if it's a sizable, scalable, other time frame trader setup, I'm going to hit it, and I'm going to hit it with size. Focus on simplicity. Focus on reproducibility. Not trying to catch moves and grab little swings back and forth. Where is the scalable setup? Where is it going to be easy to make money today? Have a great day, traders. Fantastic week. A huge week. Keep it going. Congratulations to all the traders that hit those trades. Fantastic. There are other great trades. Just picking 3 that were standout candidates for best trade templates that played out. Have a great day, traders, and may the markets go with you.